What is going on YouTube? It's Sankey and we are back with another one. Alright, so in this drop I want to put a couple of plays on your radar ahead of next week in the markets. But if you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Alright guys, so you already know the drill. There's still a lot of opportunity out there in the market, so I want to ensure we got all bases covered before we start next week in this market. So in this drop I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. You know what time it is. Let's get ready for the first one. Our first play, that's Easyjet, ticker symbol EZJ. Now, I hear you guys down in the comment section. You want more UK plays from time to time. Here's one for you. Now, what the market's doing right now that you guys got to know is they're overlooking our recovery plays. So a lot of the recovery plays, they are trading flat at the moment, consolidating. So check me out on this one. This one's seen minimal price action since February, guys. So this one's just prime and ready for a positioning before it makes this climb. Now we're moving into economic reopening. Businesses starting to open up. Travel bans starting to be lifted. So now's the time to get your positions in plays like these before they take off, guys. Because when they take off, you'd wish that you had your position in them. As you guys know, I'm always proactively looking for opportunities for you guys. And it's those plays, those industries, those sectors that the investors have forgotten about, turn their backs to. Those are the next ones to fly. So I want to ensure that we've got some recovery plays on your radar ahead of next week. This is the play, big potential, nowhere near their pre-pandemic levels. That's one of the reasons why I like them, guys. Pre-pandemic levels, 1,500 pence on this one. Currently standing pretty much 1,000. So there's still good room for this one to climb to make back that movement up to their pre-pandemic levels, which they will hit. As I say, once travel starts to really get going again. Travel isn't going anywhere, as I told you guys before. There's no alternative, so it is here to stay. And these airline plays, the ones that are beaten down at the moment, they will continue their climb. And it just means there's easy money on the table for you guys. The next play I've got for you, that's Cineworld Group, ticker symbol CINE, currently standing at 99 pence. Just like EasyJet, this one's in full consolidation mode right now. Check me out. Since February, minimal price action on this play. So to make sure they're on your radar ahead of next week in the market, so you guys can get your position before they climb. As I say, we are moving into a reopened economy. This play, they've got a roadmap to a full reopening of their chains. They're already opening up in the US, they're opening up next month in the UK, and they can operate profitably at 50% capacity. So I expect them to do well over the next coming weeks and months as people look for those entertainment spots, those socializing gigs. This is a play that's going to benefit from that. I'm going to tell you guys the next stop on this play is 125. So that's good upside on the current stock price before they make their next climb. The next play I've got for you, that's Drive Shack, ticker symbol DS, currently standing at $3.11. Now this one also is in my buy zone, ready to be picked up in the markets next week. This play is doing well, all things considered, given the market volatility. As you can see, this play hasn't broken through that $3 support line. So I'm liking the way they're moving right now. Another play that's consolidating. This one a little bit more volatile than the others, but still consolidation I'm seeing here. Now again, as we move into a reopened economy, they are going to benefit. And also this one's in hyper growth mode at the moment. We know they're expanding their retail outlets, and they're doing this at a good time in conjunction with economic reopening. This is the play, they've already crushed their earnings, they did very well. So this one's passed that earnings test that I tell you guys about. So I'm gonna make sure they're on your radar ahead of next week in the markets. As I say guys, it's these plays that are consolidating, you wanna get into now before they make their run up. So the next bit I've got for you, that's Walt Disney, ticker symbol DIS, currently standing at $187. Guys, I can't tell you how much these plays that are consolidating right now are exciting me, because I know my payday is just around the corner. All I like to do is just think ahead of the market. So I'm gonna make sure you guys know too. This is a play, they've been opening up their theme parks. I told you they just recently opened up in California. When they start announcing revenue numbers from this, it's gonna be impressive. Also, we know they got their streaming business that's firing on all cylinders. I expect good numbers from there too. So it's one of those diversified plays, a real asset for your portfolio. As I say, also in the buy zone, ready for you guys to pick up in the markets. Guys, you've got to start loving these consolidation plays. Easy money on the table. So if you're rocking with the channel, you know what time it is. Nice question comes from Philip, says, great call on Love earlier this week. Justice was finally served. Is this a play to keep longer term, or do you see them as having reached their max market cap? Or asked another way, should we exit, take profit, or average up on this play? Have a great weekend. Maybe get Ali up on the wall. It makes my OCD go nuts. So once again, Philip's come with a banger of a question. So let's dive into this one. Now, you mentioned justice was finally served on our Lovesick play. That is absolutely correct. As I say to you guys, that short-term movement in the stock price does not reflect the business, but the beauty about the market is there's always going to be a recalibration effect where that stock price comes back in line with how the business is performing on our quality plays. And once you start earning your badges in the market, you guys will see that time and time again. That's exactly what happened with Lovesick. We saw that short-term volatility in that stock price. Now it's recalibrated back up into the 70s. Now there might still be short-term movements, volatility going forward, because we know we're not out of deep waters yet, but you can see that price movement I'm talking about. Now I like it when you guys come at me with these thought out questions. It shows me that you're leveling up as investors. So you've seen that Lovesick price move up. So what's the next strategic move to ensure that you're in the money and you're maximizing on this play? So you mentioned, should you exit this one? Should you hold? Should you average up? So there's certain things we do in each situation. So I want to go through them just so you guys know exactly what we do and how we play this. So in terms of should we exit this play, I only really exit a play if I've seen the stock price run up wildly and it's well out of kilter with its fair valuation. Then at that condition, I might just maximize my returns by taking profit at that level before I know there's future downwards volatility in that stock price. So in that situation, I won't even set my stop limit. I'll just cash out there and then take that profit, go and invest into another play, maximize my returns. So if we hone in on Lovesick, that movement up that we saw wasn't so wild to warrant an exit out of the play. It was up about 10%. So there's no need to exit Lovesick at the current price. Now you also mentioned, should we be averaging up on the play? Now, in terms of averaging up, you want to be careful when you start doing that, because you want to ensure that that play is in consolidation mode and the market is in the right condition. So we know we're still in a volatile market, so we want to ensure that Lovesick is in its consolidation pattern, this new consolidation pattern, before you consider averaging up on the play. You also want to ensure that the business is in growth mode, so you want to see what their strategic moves are. Now we know they're sitting on a good cash balance, so before I say, I'll give you guys the green light to average up on the play, let's see how they're going to use that cash to fund and fuel their business moving forward. So what we're going to do with this one, guys, is just set your stop limits on this play. So if there's any downwards volatility, you can cash out a portion of your holding. Now I suggest you guys set your stop limit on this one at $65. So if you see downwards volatility of around 10%, you can cash out, take that money, move to the next winning play. Alright guys, so that wraps things up. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Now as we progress the rest of the weekend, you guys know I'm packing the heat to ensure you guys are able to crush next week in the markets with me. So I'll catch you in the next one.